welcome back to the program. The volatility in the oil markets has so far impacted the performance of the S&P 500 index in the U.S. Now, VOA correspondent Jill Malandrino reports that the outlook for the oil markets remains weak as concerns of oversupply persists.
Market volatility persists in 2016 as the S&P 500 is down almost 10% year-to-date. Declines in crude oil have largely been to blame due to the oil supply glut and weakening demand. The outlook for oil remains weak because of the ongoing stalemate between OPEC and non-OPEC in terms who will capitulate first and cut production. On Friday morning, however, oil saw a slight bounce, prompted by more hints that OPEC is ready to consider a cut in oil production, according to a Wall Street Journal report late Thursday night.
Oversupply continues to build based on weaker world economies, specifically China and the U.S. There was a post-recession bounce that lifted prices temporarily, but it's over. OPEC has been relatively steady both in terms of quota and production. And overall, non-OPEC production is projected to grow less than it did in 2015. However, Russia will continue to ramp production because their economy is in the hole, and the U.S. production is expected to decline. Oversupply is caused by several factors, but ultimately the slow growth of the economic superpowers has the largest impact.
The massive decline in oil prices since July 2014 is not only impacting the markets, but it's also a major blow for oil-dependent countries, many of which are struggling to present 2016 budgets and looking for ways to derive growth from non-oil sectors such as infrastructure, agribusiness, and services. While the potential is there, it will take time to see yield from these efforts because of the unnatural focus placed on commodity-driven growth during the boom, as other areas were largely ignored.
Oil producers are coping with the low price of oil in a couple of different ways. Those who have large debt loads will have to continue to produce even at very low levels of margin in order to service the debt. Large producers with a more favorable debt profile will store the oil and wait for an increase in prices in order to sell at more favorable levels.
The bigger issue for the investing landscape is weakness in global banks due to interest rates and devaluation. Zero to negative interest rates impact earnings and the ability to grow. Central banks have propped up the market through asset purchases over the past 6 years, and investors are struggling with the unwind and trend change in trading. Federal Reserve Chairwoman Janet Yellen also provided testimony on Capitol Hill to the Senate Banking Committee, this fielding questions about the economy, rate hikes, negative interest rates, among other items this week. So this did not lift investor sentiment and it lended to a bit more uncertainty in the market.
Ultimately, like all industries, the energy industry is cyclical and will eventually recover. Once the world's economies regain footing and growth trajectories, the demand for oil and the price will rise. At that point, the shale producers can resume investing in technology, driving their break-even prices lower and increasing their competitiveness. The energy space will be quite interesting in the coming years and will probably present opportunities for savvy players.
Looking ahead to next week's calendar, mainland China reopens while U.S. markets will be closed for the President's Day holiday. The earnings calendar is slowly starting to wind down and economic data is relatively light. With a quiet calendar, traders will largely be focused on commodities and currencies as the market struggles to find stability.
Okay, that was Jill Malandrino, VOA correspondent, reporting there. Japan's economy contracted in the final 3 months of 2015, adding to a string of setbacks for the government's economic reform policy. Between October and December, it shrank by 0.4% compared with the previous quarter. The expectation for the numbers were for a quarterly contractions of 0.3%.
Japan's economy contracted an annualized 1.4% in the final quarter of last year as consumer spending slumped, adding to headaches for policymakers already wary of the damage the financial market rout could inflict on a fragile recovery. According to gross domestic product data released on Monday, the economy underscores the challenges Premier Shinzo Abe faces in dragging the economy out of stagnation, as exports to emerging markets fail to gain enough momentum to make up for soft domestic demand. The GDP contraction in the October-December period was bigger than the market forecast for a 1.2% decline, matching a fall marked in the second quarter of last year, Cabinet Office data showed. It followed the revised 1.3% increase in the previous quarter. Speaking for the government, the Chief Cabinet Secretary says that overall, things remain positive.
Financial profit is good and income conditions are also currently recovering. Both are economic fundamentals, and I don't believe there is a future change in the economic improvement.
Last month, the Bank of Japan unexpectedly cut a benchmark interest rate below zero, stunning investors with another bold move to stimulate the economy as volatile markets threaten its efforts to overcome deflation. But the shock move has failed to boost Tokyo stock prices or weaken the yen as Japanese markets remain at the mercy of a global equity sell-off, bolstering a view among investors that the BOJ is running out of policy options.
And a delegation from the International Monetary Fund is expected to visit Tunisia this week to begin talks on a new credit program likely to be worth at least $1.7 billion. According to Tunisia, it is seeking to revive an economy that has struggled since the 2011 uprising that sparked the Arab Spring revolutions across North Africa, with deadly attacks last year by Islamist militants hitting the tourism industry in which it relies for jobs and revenue. The country has been praised as an example of compromised politics and democratic transition since the overthrow of autocrat Zainal El Abidine Ben Ali. But protests across the country to demand work last month turned violent, underscoring the fragility of the economic progress. On that note, we wrap up Business Incorporated. Many thanks for watching. I am Bolaji Akinwale.